So this quant, this quant right here is showing how to predict Bitcoin price. I just want to watch the video. So, yeah, I think it's gonna be fire.
Hey, what's up, guys? So I was a Wall Street options market maker for 4 years, and I was a quantitative researcher after that. I want to share my opinion on how to price Bitcoin and other crypto assets. I see a lot of misinformation out there and a lot of grifters and just people like this on YouTube and other places. And I just want to educate you guys on how things actually work. First thing I would say to you is that if you ever hear anyone confidently tell you that the price of Bitcoin is going up or the price of Bitcoin is going down, and they're supremely confident, they're lying to you and they're trying to sell you something. So be very wary of them and
Nobody knows which way the price is gonna go, dude.
take what they say with a grain of salt.
Big old grain of salt, please.
Nobody knows where the future price of these asset classes are going to go. If they knew, then they would state their case and that information would bake into the market, and then that's where the new market price would be. That's how these things work. For example, when a dividend comes out of the stock, we know for a fact by rules and regulations that that dividend amount is going to come out of the stock price. So when we price the options, for example, with mathematical certainty, we can reprice the options by removing the price of the dividend out of the option. And so when someone says, oh, the price of Bitcoin is going to be here in the future or there, if what they're saying is true for the reasons they say it's true, the price would just jump there immediately in that second that that information came out. Yet it doesn't. What does that tell you about the reputability of that information? It means that information is speculative at best, and the way that information will impact the price of Bitcoin is speculative at best. And so most of these grifters online are simply taking speculations, repeating them back to you confidently. And that's the grift. I'll tell you how you should price Bitcoin and how you should think about these things. And
He makes a really good point that I try to reiterate, especially when it comes to like machine learning and AI predicting price. You could use machine learning to predict sales in your organization or whatever, and that's not going to change the sales. Or you can use it to predict the weather, and that's not going to change the weather. But if me, this guy, and I don't know, 50,000 other people use AI, ML, whatever to predict price, the price is going to change. So I think that's important to know when approaching trying to predict Bitcoin price or any type of price of any market.
where the ultimate true source of the best information on Bitcoin exists. And it's free and it's right in front of you. You don't have to pay for a course for it. The best information on Bitcoin or any crypto or any asset class, in fact, is right in the market itself. For anyone who understands how to analyze markets, they know this. And it's because the price of a free floating asset is always priced most efficiently based on where the most deep pocketed people have pushed the price. So if there are more buyers than sellers at any one moment, the price of it will go up because there's an asymmetry on the bid and the ask. Now, unless you're going to look at the different levels of the market and you have access to that kind of price information, there really isn't that much more information to extract from the underlying asset class. But where there's a heavy depth of information that I find few people are knowledgeable about is the options market. The options market has way more layers of information that tell you things about the underlying asset class. And so there are options to almost everything. There's options to the S&P 500 and individual equities like Apple. There's options to commodities like crude oil, wheat, corn. And there's options to Bitcoin and other crypto assets like Ethereum. And so what do the options markets tell us about these asset classes? Well, for one, let's start with the S&P 500. The S&P 500 has a volatility smile that's often described as a volatility smirk. It's shaped like a mirrored Nike check where out of the money puts are much higher than the out of money calls. This makes a lot of sense. The status quo is that everyone is working together and growing their company and earnings should slowly go up. They're using technology to improve the efficiency of their companies, and all things being equal, earnings should go up. GDP should slowly grow across productive countries.
This is interesting. So there's within options, there's just more data points that you can grab. So if you're trying to predict the price or price an option, the more data, the better. He had mentioned That's why he kind of likes options, and that's one of the reasons I like crypto is because we have different data sources. Like, look, I'm looking at all the liquidations currently on Hyperliquid. I'm watching all of the liquidations in the past, but also looking at the liquidation points of where people are about to get liquidated. Since Hyperliquid is open, I can see if a 2% move happens, there's only 2.7 million in long liquidations. Now that's changed.
Cause you only get one ticket, might as well enjoy the ride and just do what the fuck you wanna do.
That's changed a lot from earlier, but you can see within a 4% move, there's 7.9 million in long liquidations and 2.3 million. So it looks like this is changing over time. The net imbalance here, these are things that you can't get on the stock market, which is kind of to his point of, if you want to be able to price things, if you want to get an edge in pricing or predicting, you got to have some sort of data that's a little different, because if we all predict the price is going to change. I don't even know if that's where he's going with this, but I'm sneaky interested in options because of this extra dimension, right? More data, harder to do math. Perfect. We're trading against humans on Robinhood, YOLOing their life savings. Let's get it, B.
And well, we're talking about the S&P, which is the United States. So there's a slow grind up, but these violent shocks down. And the violent shocks down are basically surprises that are bad news that lower expectations for future earnings in companies. Tariffs, for example, this directly impacts earnings. I won't get into the politics of that or whether that long term that's good or bad for the economy, because that's not what this video is about. But tariffs create a shock to the potential earnings of corporations, and uncertainty around future tariffs and whether things will escalate increases volatility, because volatility is uncertainty. It's basically future price uncertainty. That's why the shape of the vol smile for equities is shaped like that mirrored Nike check. It's expected to go up, all things being equal, and then here and there when bad news comes out, it has these shocks down where uncertainty and volatility of the asset class goes up until that uncertainty starts to calm down, and then it starts to grind back up again. And that's the general shape of US equities. You see that in the smile. And the at the money implied volatility, where things are trading right now, usually has implied volatility in the range of, say, 8 through 14, something like that. And basically that number is how much a person expects the market to move in a given year. And that makes sense, right? It's roughly like, it probably moves like 10% a year on average. Of course, the range is wide. It can crash 50% or it can just be flat on the year. But that makes sense, right? And when you talk about commodities, which is another asset class, the vol smile is shaped like a smirk, but the smirk is in the other direction. And the out of the money calls are where they're the most expensive. It's because fear is to the upside. With equities, fear is to the downside, but with commodities, fear is to the upside. So what do I mean by that? What the market is scared of is a shock to the upside. So let's take crude oil, for example. People want the price of crude oil to be low, but if a war breaks out in the Middle East, the Suez Canal might be blocked, and it might be difficult to get oil to export out of the Middle East. And that'll shoot the prices of crude oil barrels up. Surprises and bad news that hurt the market cause the price of crude oil to go up, not down. And that's why the implied volatility and the volatility smile is shaped the mirrored way of the S&P 500 volatility smile, because the market knows and understands that. What about Bitcoin? Bitcoin is a perfectly symmetric volatility smile. It's U-shaped. When you compare that to S&P 500 and commodities, it's almost combining both. It means there's fear both to the upside and the downside, which is interesting, right? There's information there. It means that the most informed people in the market are both afraid that it's going to crash, and if it crashes, it could just completely free fall and keep crashing, or it can have this melt up. And if it goes up, it'll just keep soaring and just go absolutely vertical. And that is the level of uncertainty in the crypto market, where the most informed people in the market who push the market price, who push the price of the options up or down, they've settled on a U-shaped volatility smile, meaning that the market can both go up violently or go down violently. And the at the money volatility, which determines basically where the market thinks the average volatility is going to be, is also very high as compared to, say, the S&P 500. So the market is inherently not confident about where the price is going to be at all. All that information is right there in the market in front of you if you understand how to interpret options data. So why is that the most useful information? Again, it's because the options market is the best information available in the world. Anyone in the world can trade in this market. Where the price ends up going, whether it's the volatility smile, implied volatility itself, or the underlying asset class itself, the price of Bitcoin, it's always settling where the supply and demand meet most closely. Again, people with the deepest pockets who can push the price the most are also the people with the best information. And this is just natural, right? The richest people in the world have the most expensive and the most competent fund managers. The biggest whales and the people with the most money are usually the ones dictating where the price goes for these different asset classes. So you don't need to subscribe to anyone's newsletter. Some random guy who claims to be an expert and points to some made-up cherry-picked data of their historical success buying and selling stocks. Like, you don't have any evidence that they actually had any success. And even if they did, they could just be getting lucky. You can skip all that and immediately know what the smartest, richest people in the world think about where the future market will be of that asset class by simply looking at the options market. They've pushed the implied volatility of Bitcoin up because they think it's a very risky asset class, and they've priced the puts and the calls on the downside and the upside very high. And so that's information I want people to kind of internalize. And to give you a more kind of clear example of what I mean by that, let's talk about
That's interesting, dude. This is really interesting. I'm not an big options guy. So this is very insightful.
election betting odds. There are live markets for things like betting on who's going to become the president of the United States. You'll find that the election betting odds.
I mean, I could see how to just trade crypto using options data. Like, you don't necessarily need to trade the option, but maybe, I don't know.
Are a better predictor of who's going to win than actual polls taken by news sites and polling companies. And it's the same with Nancy Pelosi, right? Like, or other politicians. They might say in a crisis like COVID's under control. We don't expect it to spread any further. But then when you watch her personal portfolio, she's buying Pfizer stock. What does that tell you, right? It tells you to watch people's actions, not their words. And it tells you that politicians lie and social media grifters who are trying to sell courses to you lie. Everybody lies, but money never lies. That's what it tells you. And so if you want to know what something should be worth, follow the money. And the way you do that is by understanding how to interpret the options markets. That's where you get the most accurate and efficient pricing data on what something is worth. Ignore all of the talking heads and all these grifters, right? The market has no idea where the price of Bitcoin is going to go. There are bull cases and there are bear cases. It's yet to be seen how either will shake out. Bull cases, oh, this is digital gold. All central banks are just inflating their fiat currencies. Other countries are adopting it, like El Salvador, and institutions are adopting Bitcoin. Yeah, these are all valid bull cases, bull arguments. Bear cases, well, why does it have to be Bitcoin? Yeah, sure, there's a fixed number of them, but that can be said about Litecoin or any other like forked Bitcoin. So why have to choose Bitcoin? Just because it's the first mover? You know, like AOL was the first mover with the internet stocks, and they went the way of the dinosaurs. So why can't that be true with Bitcoin? There's bear cases too, like that. At least gold is an actual element on the periodic table. You say, oh, you can't make more Bitcoin. Yeah, but why does the world have to choose Bitcoin to be the thing that it assigns value to? Why can't they choose a Litecoin or just some other Bitcoin fork? Every time Bitcoin has a big rally, these grifters come out on social media. They confidently say, follow my newsletter, buy my course, and retire early. You'll be financially independent, They're all just like predators, just preying on people who don't understand the nature of financial markets and what financial markets are fundamentally. Financial markets are inherently uncertain. That's why it's a market. Like, do people get that? If people had confidence in where the future price of something was, it would go there instantly. If there was any consensus on it. Like the example with the dividends. Markets are very efficient. They don't just kind of drift around mindlessly. all over the world with 7 billion people trying to find ways to scrape pennies out of inefficiencies in the financial market. So that financial market is just whipping around. It's because the market is telling you that there's no certainty around the future price. That's what a market is. It is inherently uncertain. So yeah, I hope you learned something from that, and let me know if you have any follow-up questions in the comments or if you disagree. All right, take care. Bye.
Nice, dude. I appreciate the love, dude. That was a fire little video. Fire little video. Nobody's gonna give you a winning trading strategy, bot, anything. Just run, dude. Just run. If somebody says they can predict price, again, if we all predict price, that price will change. It's not like predicting weather. This game is hard, dude. And you know, you see these ads everywhere, dude. I don't know. You're gonna see ads earn 4 to 10% per month, yada yada. Click here. You're about to get liquidated.
Don't run with the
Stay
pack.
away.
If everyone is trying to solve the same problem, or a whole group of people, if that's the latest and greatest thing to do, don't do that. Do something original. Don't follow the pack.
But using the main part of this video before that rant at the end was using the option market to get an edge. I thought that was very interesting to see the slant, like the smirk of how the S&P is versus how crypto is like a big old smile. I think he did a good job.
This is your brain when you're struggling to focus.
Explaining that.
And this is your brain.
It's because, yeah, there are some people that are super bearish crypto. And then the other side is like extremely, like Michael Saylor's side is, I'm going to bet my life on it. And that's all shown in the option data. Is that the only place to look? Absolutely not. Absolutely not. I haven't even looked there yet. So this was pretty informative to me. Big shout out to Lit Nomad. I'll try to put this, I will put this video here. Let me just put it in the chat right now, just in case you want to go watch it. And I'll make sure it's in the description. All that good stuff, man. But this is fire. Couple good ideas here. See if there's any ways to get option data. Option data for BTC could be useful. Could definitely be useful. I'm looking at these liquidations. I find this super fascinating. So I've been having fun with these liquidations for the past year. I've been getting them in the past, but now the ones in the past, I have them in the future too. So I can see who's sitting on Hyperliquid. I think this is pretty slick. And ironically, you saw that huge $12.5 million liquidation here. Looks like ETH bounced a little bit off that. I don't know, when they're that big and I have the whales on there, there's something to it. There's something to it, but like Homeboy said, dude, I don't have all the answers. Nobody has the answers. He doesn't have the answers. It's a market. These are perfect markets. Not perfect. I think there are anomalies that exist. And they're erratic though.